Bismillahirrahmanirrahim. This is the first video on federal government accounting and reporting. In this video, we will discuss the accounting and financial reporting structure, the budget process, types of funds used by federal government, and federal government financial statements. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We also hope that this video helps fresh graduates who have joined the governmental or not-for-profit organization and want to refresh their learning on federal government accounting and reporting. So let us start with discussing the accounting and financial reporting structure. The Federal Accounting Standard Advisory Board, FASAB, established the Federal Accounting Principles by 1996, and the first audited consolidated federal statements were issued in 1997. Next, let us talk about the federal government accounting agencies. The federal government accounting is decentralized, and each of its department and agency is responsible for maintaining the ledger accounts and preparing the financial statements. Three agencies are responsible for the federal government's financial management and accounting and financial reporting. They are Office of Management and Budget, OMB. It assists in preparing budget and overseeing its execution. Treasury, they provide central payment services for federal government agencies. And General Accountability Office, GAO, the legislative auditor. Next, let us talk about the budget process. The budget is prepared by the agency on the basis of general budget and fiscal guidelines. They submit the budget request to the Office of Management and Budget, that is OMB. The OMB analyst resolves the budget issues, if any, with the agency officials, but in some cases, it may need a resolution to be approved by the President and its policy staff. After evaluating the proposed budget, the President transmits the budget to the Congress. The Congress considers the proposal and it may change funding levels of individual programs. They may add or eliminate programs, or it may even add or eliminate revenue sources. The Congress first considers budget totals before taking a decision on specific appropriations. Once a resolution is passed in this regard, the levels of the total receipts, total budgetary authority, and outlays are set. Next, the appropriations are initiated, and once approved, they are sent to the President for approval or veto. Once approved by the President, appropriations warrants are sent to the agencies by the Treasury. Now, the agency revises its proposed budget in accordance with the appropriations and submits a request for apportionment of the appropriation to the Office of Management and Budget, OMB. This gives the agency authority to obligate the government to make disbursements for expenditures. It would be worth mentioning that if they are not spent or obligated by the end of the fiscal year, they expire. In some cases, the government can make indefinite appropriations also. I would also like to add that the approval of appropriation does not give an agency the immediate authority to spend. The agency have to go through several processes. These processes help to prevent agencies from obligation or spending more than their appropriations. This also helps the Treasury to manage cash and even to help the OMB monitor expenditures levels in relation to revenues. Now, the administrating department can make an allotment of all or part of the apportionment to the agency. So, once the agency receives the allotment, they can obligate or spend up to the amount of the allotment as per the budgetary guidelines. The agency can commit resources before it obligates. It is based on the internal request to purchase, say, supplies, equipment, or services. Commitment accounting helps maintain control over availability of resources, particularly if there is a relatively long lead time between the request to purchase and the placement of a purchase order or contract. Let us see how the federal budgetary accounting cycle works. First of all, the agency budget request. I suppose the agency has requested for 1,200,000, and then the legislative they appropriate 1 million. That is, 1 million is appropriated and 200,000 is disallowed. Now the OMB apportionments this amount to the department. Suppose they apportion 900,000. So the OMB have appropriated 900,000 and 100,000 is unapportioned. Next, the department allotment is done to the agency, and suppose in the first quarter they have allotted 200,000. So the department is allotted 200,000 in the first quarter. Next, the agency they obligate in favor of a vendor. Suppose they obligate for a vendor 75,000. So from this 200,000 that has been allotted, 75,000 is obligated, while the balance 125 is not obligated. Once the agency is going to receive goods or services for the value of 75,000, now they are going to be expended. So the key point of budget control is the obligation. It is a legally binding agreement that will result in the amount of money being spent by the agency. It is like an encumbrance in case of local and state government. An obligation is incurred when an agency places an order or signs a contract or takes other actions that require the government to make payments. It's a violation to incur an obligation without sufficient budget authority to do. For example, they have been allotted 200,000, and if they spend more than 200,000 or they obligate more than 200,000, then they are violating. So resources are obligated and identified in the accounting system as an undelivered order when a purchase order is placed or a contract is signed. This is a undelivered order. And once the goods or services are received, the undelivered order becomes delivered order unpaid. The agency do not make a direct payment, rather it requests the treasury to make payment by sending it a disbursement schedule. When the treasury notifies the agency that payment has been made, the order becomes a delivery order paid. Payment by the treasury are called outlays. Such payments are made to liquidate obligations. They are generally recorded on a cash basis, but they also include items like interest accrued on the public debt. Outlays are the budgetary measure of federal government. Next, let's talk about the types of funds used. The federal government uses several types of funds, and these funds are classified as earmarked funds and non earmarked funds. Earmarked funds are for specific purposes. They are financed by specifically identified revenues and may be even supplemented by other financing sources also. Non earmarked funds are not for a specific purpose. The types of funds used by the federal government are general fund. It accounts for receipts that are not earmarked for a specific purpose. It also accounts for most of the expenditures of the federal government. The trust fund accounts for receipts and expenditures for resources used to carry out specific purpose and programs. Then public enterprise revolving funds are used to programs authorized by law to conduct business type activities primarily with the public. Then we have a special fund, and as the name suggests, these funds are used to account for resources from specific sources earmarked by law for special purposes and for spending in accordance with specific legal provisions. Cash receipts collected from the public for an earmarked fund are deposited in the treasury. The treasury uses this cash for general government purposes. If the earmarked fund disbursements exceed its receipts, it will increase the government financing needs and will require more borrowing from the public, higher taxes, less spending on other programs. Next, let us talk about the federal government financial statements. Now we are going to discuss the accounting framework within the government agencies, and we start with the statement of net cost. And you can see this is for the United States government. This is not for any specific state, but this is for the federal government of United States, and this is for the year 2014. Now, these statements are prepared in accordance with GAAP as per the FASAB guidelines. Expenses are generally recognized when incurred, while tax revenues are recognized on a modified cash basis. The statement of net cost first records the gross cost, then the earned revenue, and then we have the subtotal. And subtotal is the gross cost minus the earned revenue. Then any gain from changes in assumption will be subtracted from subtotal, while any loss from changes in assumption will be added to the subtotal. You can see here that there is a loss, and the loss is going to be added to the subtotal. In this case, there is a gain, and the gain is going to be subtracted from the subtotal. Next we are going to talk about the statement of operations and changes in net position. Now, the statement of operation and changes in net position shows all the revenues and expenses. Notice that the consolidated net cost shown in the net cost report reported in the statement of net cost is what is recorded over here. We simply bring the number from the statement of net cost. Then the activities that are financed by non-earmarked funds are recorded as funds other than those dedicated collections and are separated from those financed by earmarked funds called funds from dedicated collections. The net operating cost is 791.3 billion, and this is the year's deficit on the accrual basis of accounting. Next, we will talk about the reconciliation of net operating cost and unified budget. Now, the basis of accounting in federal budgeting is primarily a cash and obligation basis. Hence, the reconciliation of net operating deficit of 791.3 billion, and this amount is recorded from the statement of operation and changes in net assets, that is, we can see over here. And the statement also shows a unified budget deficit of 483.4 billion. Readers must go through the notes and the supplemental information given in the financial statements, as the data in the statement cannot be grasped without reading them. Finally, let us talk about the balance sheet. And we have the balance sheet over here, and you can observe that the total assets minus total liabilities is equal to total net position. Now, the total net position is equal to the earmarked funds plus non-earmarked funds. You can see that they are recorded over here. Net position at the end of the year 20,893. Funds other than those from dedicated collections, and funds dedicated from dedicated collection, that is 3197, and these values are recorded over here. And you can see that that the total assets minus total liabilities is equal to the total net position, and total net position is equal to the total of earmarked and non-earmarked funds, what we call them as funds other than those from dedicated collections and funds from dedicated collection. So we sum them up together, and that's how we get these numbers in the financial statement. And then you can also see that the total of the liabilities, plus the total of the net position is equal to the total liabilities and net position. You can add them up. This will be equal to 3065.3 billion. So this completes the first video on federal government accounting and financial reporting. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.